All right, let's get into our next discussion now. Many countries across the world have progressed remarkably well in insurance adoption and acceptance, but in many parts of Africa, including Nigeria, have a low level of insurance culture.
Yes, indeed. In fact, when you talk about insurance in Nigeria, it is met with a kind of skepticism and apathy by many citizens. But why is this so? Well, we have joining us from our Abuja studio, Nigeria's Commissioner for Insurance, Mohammed Kari. Thanks for joining us on TVC Breakfast this morning. So how will you describe Nigeria's insurance industry so far? I mean, when you talk about insurance to the average Nigerian, the imagery that it strikes is, no, I don't even want to go there. Talk to us about the level of insurance in Nigeria.
Especially after consolidation.
Yes, the insurance penetration, as we call it, is very low in Nigeria because of individual and people's attitude and skepticism about services of insurance. But the industry is working seriously to address that issue. And that issue usually is not helped by sometimes poor services offered by the providers.
All right, has there been any growth so far after consolidation? Because we remember the few years of consolidation sometime in the past. And from that time until now, has there been growth in the number or the capacity of insurance companies in Nigeria?
Yes, since consolidation, which happened in 2007, the market had grown steadily, but unfortunately, in the recent years, we have had the economic recession, and the economic recession has affected all parts of the economy, including insurance. So we are hoping that with the economy getting out of recession, things will improve.
Of course, we hear that the insurance industry invested some 448 billion naira into the money market in 2016. And now there's a general perception problem out there for the non-insured and even the insured public. What are you doing to change the perception for the better as far as insurance is concerned in Nigeria?
The insurance market itself, which is the providers, the underwriters, and the intermediaries have come together with us and agreed to address the issue of perspective. For over the years now, the players have always concentrated on marketing their individual products. But now we are coming out with a project to sell insurance itself, insurance as a product. And we believe if people understand the benefit of insurance better, they would definitely imbibe the culture of taking insurance. We have in law certain classes of insurance that are compulsory. Now, the first attempt to improve the penetration now is to ensure people appreciate what the law requires of them. And most of the areas covered by these compulsory classes are areas that pertain to the liability of a third party. So whether you like it or not, if your businesses or your premises falls under such a compulsory requirement, you just have to insure. And with that benefit filtering into the market, into the society, people will appreciate that not only the compulsory insurance is good, but also individual interests and assets can be covered by insurance. We believe that will bring a huge impact.
All right, but give us a picture. Despite this perception that we talk about, are more Nigerians insuring? When we begin to count the numbers, are more people insuring, or maybe it's just the perception is dealing a blow on the number of people who are getting into or getting their lives or even property insured?
Well, insurance penetration is measured against the population of the country, of a country. And if you compare the insurance sold against the population of Nigeria, it is extremely low. Like I said earlier, a lot of it has been caused by bad perspective of the business itself, and people have not realized the benefit. That is why we're trying now to encourage people to understand what insurance can do for them, not only for business, but for individual families and individual persons. And once we are able to scale through that, we believe people would see the benefit of, even not the compulsory ones, the benefit of protecting their assets. Now, a major area that has become very glaring to Nigerians is these issues of collapsed building. Whereas the authorities that supervise building construction have responsibility to ensure that buildings are done properly with good materials under good working conditions, the law has already provided that anybody building any structure above 2 stories must take insurance to protect third parties and workers on the premises. And for example, the motor insurance, which is the most popular and compulsory aspect, people don't understand that the intention is not just to buy a certificate to show to the authorities when they stop you on the way. No. But when you buy the compulsory third-party insurance, you protect other users of the road. You protect injury and damage to their properties. So when people understand and appreciate these benefits, we believe it will show.
And do you have any new channels for distribution of insurance products across the country in line with the CBN's financial inclusion drive?
The CBN Financial Inclusion Drive is a project that cut through all financial regulation, all financial sector, and we are part of it. We have identified certain areas of the population that are not insured, not because they don't like insurance, but because they thought their assets and liabilities, which are very meager compared to the big conglomerates, is not insurable. But that is a huge number that if we capture, we believe it will have an impact on the penetration. So we have targeted these areas of micro insurance, that is the micro operators in the economy. It can be your neighbor vulcanizer, it can be your kiosk owner, or it can be anybody who has any property or liability to insure. And we also have identified like takaful insurance, which is insurance based on Islamic Sharia law. For those that don't believe in the conventional insurance, that channel has been opened now. We have already issued 2 licenses last year for pure takaful insurance companies. And we have 3 other conventional insurance companies issuing takaful products through the window. We have now many insurance companies issuing the micro insurance products, and we have got applications for about 4, from about 4 interested investors to obtain pure micro insurance license. And these are areas that are targeting financial inclusion because they go to the root of the economy, to the grassroots, and that is a big untapped market. We believe once that has been reached and the benefit is seen, it will develop the economy. Now, government has come out with a policy on agricultural financing, and we're working with NASL, which is the organization formed to ensure finances filter down to the grassroots, to provide insurance using the index method, which is a new scientific method of insuring farming. We believe these are the areas and the part of the society that requires this financial inclusion, and they have been targeted by all the financial regulators, including the insurance regulator.
All right.
All right. You talked about the issue of perception earlier on and even penetration. Give us a picture of the challenges the insurance companies are facing when it comes to penetration and getting more people on board.
Well, insurance companies have concentrated their operation in the metropolises, and they have avoided the rural areas for economic reasons. That's one. Secondly, a large part of Nigerian society, for religious belief or cultural belief, do not believe insurance works for them. And then we have the spending power of the Nigerian population. Where there is no money, insurance is always relegated to the last item of the budget. And when there is a hard crunch in the society, like the economic recession, nobody buys insurance. Maybe they try to buy only the compulsory insurance. But targeting and identifying these areas and providing special products for them and making concessionary programs. For example, the micro-insurance products that are sold in the market have special concession, different from the conventional policies. Because you are targeting a micro-client, you would like to give him an opportunity to spread his premium. When under the conventional cover, you must pay premium before the assumption of the policy. And under the takaful insurance, for example, you have products that are compliant with Islamic Sharia law. So for people that have cultural or religious bias on other conventional products, they have an opportunity now to go to these classes of business which are adequately considered in design to cover their perceptions.
All right, Muhammad Yari, looking at insurance density, if you do a comparative analysis of Nigeria and countries like Kenya and South Africa, the disparity is huge. Nigeria is $8.3 billion, while Kenya is $36 billion. South Africa, a whopping $970 billion. Now, what kind of policies are needed really to grow Nigeria's insurance sector?
We believe making an advance into the retail products will give a big boost. Nigerian insurance industry have concentrated before now on commercial risks, on big conglomerates, forgetting the individual client and the small client. These countries you mentioned have already developed products for the micro individual and micro families, and that is why they have been able to get a big boost. And especially the use of technology in those areas, like the mobile technologies, has helped reach the common man who does not have access to the big conglomerate insurance in the city. Now, we have also created different distribution channels to encourage access to consumers of insurance. We have released, concluded to release about 12 new channels. Already we have released one last year with the big fanfare, which is the bank assurance channel. We are considering to release multiple other channels to sell through professionals, to sell through NGOs, to sell through other community organizations, to be able to reach that individual who has been rich in those countries you mentioned. Now, the mobile technology is a huge opportunity to reach, because the users of mobile technology in Nigeria are bigger than those markets you mentioned. So if we can sort out the issues between us and the telecoms, we have already visited the Nigerian Communication Commission, NCC, and I've discussed with them how we can use the telecoms to sell insurance and also enable money transfer through the financial system. And we believe that is going to bring a big boost to insurance penetration, which is what exactly has helped those two countries you mentioned. And they also have a program of insurance education, which is what the market now has concluded to do. They have been able to sell to individual insurance the benefit of insuring. And once we reach the individual through the intensive program, marketing and educational programs we have, we are going to see a big change to consumption of insurance in Nigeria.
All right, let's get into your commission now. When it comes to the issues of regulation of companies, we often still hear some people say that when it is time for them to make claims or become indemnified, they don't. Usually, some of the companies they renege on and then try to change laws and try to make things very cumbersome or clumsy for them to lay claims or make claims, as the case may be. So, how is your commission ensuring that companies stick by the rules when it comes to paying their indemnity?
Exactly, that is the role of the regulator, Mike. Regulation is actually to protect the interest of the policyholder and to ensure that players in the industry plays according to the rule in the borders set out by regulation. And regulation enables the regulator also to issue policies and guidelines along the way. Now, insurance companies are expected in law to pay claim within a certain period of time, which is 90 days from when they accept liability, or to reject a claim within 90 days if there is no claim, not to hold it perpetually. And that is what the regulator ensures everybody does. And a regulator that enforces that obviously is accused of over-regulation. Now, the culture before now had been not very encouraging. Insurance companies have dragged their feet in those days before they can pay claims. But now we have instilled that discipline of payment of claims. If you had followed the industry's happening, year before last, we forced insurance companies within 90 days to clear all outstanding claims in their books. And we have now monitored them regularly to ensure that they do not delay claims unnecessarily. And our commission has a customer service unit. If you have any complaint, you can submit your complaint to the Complaints Bureau of our commission, and we pursue it for you. And we have received a lot of satisfactory comments from people who have been paid through those complaints. And companies that have delayed claims, we penalize them accordingly so that the next time they have a claim, they're paid on time. And the claim settlement period has improved tremendously.
Now, talking about regulatory sector, how conducive is the regulatory environment? And you may want to speak to the so-called risk-based supervision framework. What is it all about? How is it expected to help the insurance industry?
Well, first of all, the perception of regulation will depend on who you ask. If you ask the provider of services, which is the insurance company, or the intermediary, they will say regulation is tough. Regulation is tough because the regulator forces them to ensure that they work according to the law and to ensure that they pay the claim when they happen. So, on the other hand, the policyholder, who is the consumer here, will be happy with regulators because regulators ensure that he gets his indemnity payment when he has a loss. Now, we have ensured that companies have maintained good solvency levels. They have the financial clout to pay claims when claims arise. Because when you capitalize your company to start business, that's not the end of it. The risk-based supervision now will ensure that you have enough assets at any time to pay liability when they arise. So risk-based supervision will measure your assets against your liability. And we have provided that if you have, for example, an X amount of liability, you must provide an X plus amount of assets, and that is risk-based. So the risk-based supervision will first determine the risk-based capital, which is a minimum capital requirement for every operator to be in the industry. And thereafter, the amount of liability you accumulate will determine how much assets you add on top of that minimum capital requirement. And that is what we are doing now. We're in the process of implementing that. And companies have been asked already to assess and review their capital. And we have started intensive training for the directors of each company who are responsible in determining what we call the risk appetite. The risk appetite of the company is what the risk is willing, is what the company is willing to retain in its business. So for example, if we have a minimum capital requirement of say 5 billion naira, and a company has been able to capitalize 5 billion naira, but what can 5 billion naira now protect? It cannot protect.
Very good question, but we'll have to leave it there.
But Mohammed Kari, thank you very much for talking to us. That's the much time can permit us right now. We have so much to talk about that, but we don't have all the time right now. Thank you very much, Mohammed Kari, Commissioner of Insurance, joining us from our Abuja studio. Thank you.
Thank you.